Hi, this is the 10th of October 2015. We are getting to the interesting part of the month. Uh, this has been usually a good cutoff point for many moves to start, essentially because the result season that started to happen quarterly very long back used to have an effect, and therefore it actually comes in the mind. And a lot of the near term derivative traders look at the first week as from where the trend for the rest of the month establishes. Now, that said, we are entering another result month after 2 quarters of negative growth. What is it that we are going to be looking for? It's going to be pretty flattish, I guess, but the way the market is, because it's been bouncing out of oversold uh, territory and it's already out quite a bit. The question is how are you going to react to the events in the weeks ahead. Now, it's very much possible that you see the reverse reaction to certain data that comes out. For example, you might see a bad result, stock might drop, and at the end of the day, it might actually close higher. Now, you might see those kind of wild patterns simply because the market's coming out of oversold positions, and there's very little in terms of, I guess, excessive long positions out there to really unwind and drive it down. But at the same time, let's see how it goes, because we are facing a world market rebound which has just started at the last week of September, and India actually bottomed in the first week of September. So there's a lead lag. Even if we do start hitting some kind of a resistance zone, we might continue to move in a band maybe for several weeks as various other equity markets continue to catch up with what is going on. So that's one thing that we're going to be seeing. It's very much possible that the typical bad October ends up being a little more positive than what is usually expected. But that apart, it still looks like this move is counter trend in nature in terms of the wave structure, the way it started. The initial moves between 7700, 7900, and then back to 7680, basically 7550 to 79 and back to 700 was a 3-3 kind of structure, typically a corrective pattern, and that is why my sense is that this remains a counter trend move. The only thing is it can overshoot on the upside, so we'll have to actually see what is going on, look for a reversal before we can really call it. So that's as far as the market is. There's one big macro trend which has been developing, something I identified almost early, I guess, because like they often say that I end up seeing things way ahead of their occurrence, and that probably happened in 2014. But it's actually beginning to play out, and that's the turnaround move in commodities. And essentially, it's initially started with gold. Gold is something I've been writing about for pretty long. I think since it was at 1220, more than a year back. And each time it's rallied back, it drops a little, makes a slightly lower low, and then rallies back again. And what has ended up forming is an ending pattern. So I guess gold has finally formed an ending pattern over the last 1 year between 1200 and 1100 and bottomed out. But then that was just the first commodity to show it. We've seen the rest of the commodity pack just keep falling till we got the turnaround in crude. Then we got it this month. We saw a positive monthly close in copper after a very, very long time. We're seeing some bounce back in base metals at the end of this week. They've been whipsawing a lot. I've been getting a lot of that wrong, expecting a bounce, and then they've been beating about both ways. But essentially, they haven't fallen too much, and it looks like we should be getting a rebound. So, big question is, are we getting a rebound across the commodity space? Now, I guess the two interesting parts of it is, of course, gold, and the other one, which again I wrote about more than a year back. I covered a couple of stocks and probably would cover. I'm starting to cover again. Is the agro space, essentially agro commodities. When I'm looking across the board, what I'm finding is that agro commodities, essentially soya, wheat, rice, cocoa, coffee, corn, sugar, all of them, not just one particular commodity, all of them are beginning to turn around. I think I wrote a couple of notes on agro commodities in the last 6 months. We've seen a rally in rice. Wheat continued to form a triple bottom, which is why it rose, it fell, it rose again, but I think it's formed a triple bottom. Soya, I wrote it made wave 1. I marked it at 61%. It has now retraced almost 90%, but not broken the previous swing low. So soya price is also turning around into a third wave. probably from here. We still don't have much of a confirmation on soya yet, but it looks like that should be the case. And similarly, sugar was very oversold even in Feb when I wrote about it, and continued to decline. And it's made a positive divergence on weekly charts, and again sugar prices are also moving up. So we have the entire agro commodity space moving up. If you have not noticed, tea prices are already back at their 2-3 year highs. So my sense is a definite turnaround in gold and agro commodity prices. I guess my thought was that metals would just be a counter trend, but looking at the way crude has double bottomed, it hit $32 or $30 way back in 2009, and this time around we came close to 38. When you look at a quarterly kind of chart, then it will look like a double bottom. Are these important bottoms, if not just for weeks, but maybe for months to come? How far? So I guess you're going to see participation from the entire commodity pack. And so I started opening up to the idea that what if even many other commodity prices like the metals and crude, which are not usually expected to go back all the way up. Fundamentally, people will argue both ways. Oh, the economy is all down. These things cannot come back. And that's essentially the complete opposite of what they would have told you 1 year back. That, well, economy is all well. They can't fall too much. There will be support for crude at least at $60. And that didn't happen. It kept breaking down. We kept giving targets all the way down to 38. And the moment it moved above 42, I think I've said that it's turning around for a bounce. But the big question I'm raising is it just a bounce or a slightly bigger rally that we are looking at? And then the size of the rally can have various options. $60 odd is just the obvious one, which I think almost everyone has now guessed and written about. The question is, will it do more and how much more? Again, I had a view on copper when I wrote about commodity, the equity commodity shift 2 years back in my Condotype updates. I wrote it at least twice. It didn't happen at that point of time. We've seen US equities continue to stretch. Our own equities did pretty well because in the midst of the Modi election. And in the subsequent period, we've seen a big sell-off in essentially the crude and metal space. Okay, so agro commodities were down. They've been bouncing around, basing around. Gold has been basing around. It's the rest of the pack which had not fallen, which fell very sharply. And now you have all of them looking like they're turning up. So, and in the same time period, we've also seen the dollar rally, essentially on expectations of rate hike. So you can actually say that, there's some authors out there already writing that, well, the Fed has already tightened, just by talking about it. So we've already seen the dollar rally. We've already seen bond yields go up. And maybe this is time to see at least a reversal in the dollar. I don't know about bond yields, but definitely I think that the dollar could turn down, and it could turn down a lot. Essentially, if you see, the biggest component is the euro, and the euro's completed a 3-wave sell-off all the way from its significant peak above the 1.5 mark, all the way down to almost unity. So people had the unity target where you got to 1.04. Isn't that good enough? Are you going to wait for the last 4 basis points? So let's not get into that debate. You got as close to the target as you could, and that means the target is achieved. And we are seeing a turnaround. You're seeing daily, weekly momentum already turn to the buy side on the euro. And the next thing would be on monthly. So you have 2 monthly positive closes there. I think there's a good potential turnaround in the dollar, and it will probably fall a lot more than even most are thinking right now. And that could trigger, and that's your key trigger to one final commodity rush. After all, if money is going to move out of equities, where's it going to go? Usually think of gold, but why not the entire commodity pack to some extent at least? Gold might just hang around for a little longer if it's a bigger trend that is unfolding. So that's it. That's the point. We're going to see a turnaround in the commodity space. I think the most interesting parts of it will be gold and the agro commodity space. People might be less interested in crude and metals, but I think you will get at least a good rally there. And there is the potential that they too overshoot. So if you saw, I posted a chart of copper way back, a year or 2 back, opening up to an idea. It didn't happen then, but when you actually draw a monthly or a quarterly chart, those ideas don't change. Just because copper's fallen from 2.8 to 2.2 doesn't change the big picture. Now I'll sound a little technical here, but what happened with copper was that it ended a 5-wave move in 2008. Now that's not an issue. Now Usually, when you enter 5 wave, you would think that okay, it should enter a bear market. You shouldn't see a new high in copper, but we did see a new high in copper in 2011. So what was that new high? So an elitician will say, okay, maybe it's an expanded flat. The fall in 2008 from 2008-9 was A. The new high is B, because in an expanded flat is the only time when a corrective pattern rise can be marked as part of still a downward trend, even though it makes a new high, as long as it doesn't go above some Fibonacci ratios like the 138% mark or the 123% mark, and that didn't happen. But the essential requirement is that if you do make a new high in a corrective pattern, the next sell-off should have been an impulse or should be a 5 wave in wave C. The sell-off that we've seen from 2011 to 2015 in copper is not an impulsive wave. So this makes it even more trickier. Everything from 2008 is 333 and you actually made a new high. So the potential was that maybe even if copper prices are peaking out longer term, as some global forecasters would say, from an Elliott wave perspective, you have to form some meaningful pattern, and if it's not an expanded flat, the only other logical pattern is known as an ending diagonal. Now, an ending diagonal would require that this fall from 11 to 2015 is D, and you're going to make E. Now, E means that you go to one more new high in copper. Now, that's almost impossible. Fundamentally, it's not possible. It can't happen. Nobody thought it's possible, and now that prices have fallen, well, it's definitely impossible, and which is why you need to consider whether it's possible. And it might not, the reasons are not always logical as they develop and come out. The reasons completely change. It could simply mean a lot of monetary asset allocation. It might have nothing to do with the fundamentals of the particular sector. It can also mean that you end up with QE4. The expectations for that too are beginning to build up as the US economy slows down. We don't know what will be the triggers, but at least there are a couple of reasons for a rally. Will the rally develop into something bigger? All I'm saying is if I look at a quarterly or a yearly chart of copper, you can't rule it out. And that makes the whole thing a little interesting in favor of commodities. So I think a falling dollar and rising commodities are probably the next big trend. Which parts of the commodity spaces better? Like I said, gold and agro. The rest of it will also move up, but you need to be open to the idea that they do overshoot before they peak out and turn around. So I wouldn't look for early retracement turnarounds unless there's a clear setup which tells you that yes, this is a setup for another turn down. But if you see it, the trend continuing, I think you need to just follow the trend as far as you can. So that's the update for this week ended the first week of October. Thank you.